With chaos at the New York Stock Exchange.
Get back in there at once and sell!
We are looking at major records for the Dow.
Now is the time to buy.
Well, the law of gravity hit Wall Street today.
We're down by between 3 and 4.5%. The stock market is now down 21%.
Because we're now down 43%.
What in the world is happening on Wall Street?
You gonna do something or just stand there and bleed?
The whole town's gone crazy.
Hello and welcome to this week's edition of the Big Money Report. I'm your host, David Booth, President and Financial Advisor at BIG Investment Services. That's BIG, Booth Investment Group. We're a full-service financial advisory based out of Dover, Delaware, serving clients all across America. And you can read all about us at abigplan.com. That's www.abigplan.com. I like to put the show together once a week just to give you a recap of the week behind and a peek at the week and weeks to come, trying to keep you up to speed with you and your money. And we're glad you're with us today. It is Friday, April 19th, 2024. And let's just jump into the numbers. A down week for the market, not a surprise to us. We've been expecting some weakness, so actually glad to see it. We've been well prepared for this. Dow Jones didn't have a too bad of a week. It was flat on the week, but it is only up 0.7% for the year, so not doing much at this point in time. The S&P 500 was down 3% this week. Its worst week since October of 2022. So pretty ugly week for the S&P. NASDAQ Composite was even worse, down 5.5% this week, and the Russell Small Cap Index down 2.7%. Taking a look at the volatility index, it spiked up a little bit this week, up 8%, hovering right around 18.7. I'd like to see that probably get up into the 20s. Maybe that'll happen, maybe it won't, but I'd like to see maybe a little bit more fear out there than what we're seeing just yet. And then looking at the long-term bonds as measured by the TLT, down 1.2% this week. And they're down this year, 9.8% year to date on the long-term bonds. So long-term rates still not getting any love there. Then taking a look at the sectors, just an ugly week across the board, really. The semiconductors got crushed. Semiconductors and tech. Semiconductors were down 9.7%. A couple of bad earnings reports really kind of bled through to the rest of the market. We've got AMD, which we last sold a big chunk of it for like $206 a few weeks ago. It's down to 146. So we're getting really close to buying some of it back again. If it gets down around 135, 140, actually, I really start taking a look at picking some more of that back up again. Looking at some other things. Consumer discretionary was down 4% this week. Tech, as you can imagine, if semiconductors are down, tech's not going to do well either. It was down 6.2%. Healthcare was flat on the week. What about the positives? Utilities were up 1.9% this week. Staples up 1.4% this week. So keep that in mind. That's really a sign of people trying to play defense, putting money into utilities, putting money into consumer staples. So that is quite interesting. As far as anything else, financials, they were up 0.8% this week. So, look, the banks have been reporting their earnings. And I think I mentioned to you last week that the first reports last Friday were pretty good. Some of the projections moving forward were so-so. But, these CEOs do that all the time. They always try to sandbag to some extent. They want to underpromise and overdeliver as much as they can. And what I noticed here during this earnings season so far with these bank stocks is that they're being sold on the report, but then they come back pretty strong. So like Bank of America reported, and the stock took a bit of a hit, okay? And then it turned around and it came right back again, ended up finishing positive 3.2% on the week. So again, I think the market sometimes is looking for excuses to sell, but then cooler heads prevail and things start coming back again. So across the board with the sectors, the defensives were strong. Everything else was pretty bad. And then gold was up 1.9%, silver up 2.2%. Now, we do have quite a bit of exposure there to the gold side of things with Kinross Gold, which is up 6% this week. So when you have things that are not directly correlated with the market, it can be a benefit, especially in the markets going through a downturn. We've seen some of our energy stocks performing really well here lately. We've seen gold stock performing really well. So I like having some diversity away from things that are going to move lockstep with the S&P 500. So anyway, down week in the market. And why? Well, mainly think geopolitical fears. I know you've probably been paying attention to the news, so you know that Iran launched that big attack against Israel. 300 and some drones and missiles were launched towards Israel, most all of which were shot down. And then it was hoped that Israel would just consider that a victory. They blew up an Iranian embassy. Then Iran retaliates with 300 drones and missiles, which was very much forewarned about, right? It was everyone saw it coming. I thought that was kind of interesting. Again, trying to maybe save some face there. Those missiles and things were stopped for the most part. And then Israel did decide here at the end of the week to do a targeted strike against Iran. Doesn't like this against a military base. I don't think much damage came of it. So we'll see what happens next. Will Iran just kind of let that go and be the end of it? Maybe. They seem to be a bit dismissive about it in the press, so we'll see. But the market's on edge about that. Definitely on edge about that. And then, you've got the Federal Reserve folks out there talking, and the narrative has changed dramatically on interest rates, which we thought it would. We really thought it would. Coming into this year, 6 to 7 cuts is what everyone's expecting. Now, some of these Federal Reserve members are saying no cuts. And one actually this week said, if inflation continues to go the wrong way, we might have to hike again. Market doesn't like to hear that at all. So these things aren't a surprise. We've been kind of waiting for them. I think the bigger story right now is how the market's going to react to earnings moving forward. Next week's going to be a huge week for earnings. Got some big companies reporting, Google, Facebook. I think Facebook went down quite a bit today ahead of that, down $20, 4% today. So I think maybe the market's trying to hedge its bets a little bit and take some profit off the table before these companies report. We've already done a lot of that. So we've already trimmed a lot of these big winners, and we're sitting on some cash. And I tell you, the market's looking like I'm about ready to start buying next week. We're down a good amount now from our highs and really ready to start doing some buying. When you look at some of the technical indicators, market's looking like it's kind of getting oversold. We might be getting pretty close here to a short-term bottom. May or may not. I don't know for sure, but I do know that's a good entry point here. Things look pretty good to buy here. And there's some things I've been watching that look really good to buy. So some of the stuff on my list have come down to some really attractive price targets. So I'm probably going to start putting some of this cash to work next week. We start seeing some activity. That's because we are buying this dip. And then if the market does take a bigger leg lower, if it goes down much lower, say 10% or more, which is probable, a lot of times the market gets down past 5%, it tends to go down between 8 and 11. So if we do get that bigger move lower, I may actually take some bonds and add to the market as well. I do strongly believe that the narrative of the market is still pretty strong. Economic growth is there. The employment picture remains solid. I think the market goes higher. So if we get a bigger drawdown, we're going to add more to it to take advantage of that moving forward. So that's where things are this week. Negative, but positive for us. We've been looking for it. So I'm glad it's down. Maybe it'll go down a little bit more, but I am looking to maybe start doing some buying next week. So between now and next we meet, as you're thinking about your future, your long-term goals, all the things you want to do with you and your money. Maybe it is take that big trip, retire a little early, pay for college or a wedding. Maybe it is come off the road. Maybe you've been traveling the country in your RV and now you want to go back to buying a house. Have that conversation this week. Hey, whatever your goals are, you know what they are. Don't just dream about them. Dream big, think big, and I will talk to you next week.
Thank you for listening to this week's edition of the Big Money Report with your host, David Booth, President and Financial Advisor at BIG Investment Services. For more information on BIG and how you can access their planning and investment management services, visit them at abigplan.com. That's abigplan.com. Or call them toll-free at 866-946-PLAN. That's 866-946-7526. The foregoing content reflects the opinions of David Booth and Booth Investment Group Incorporated and is subject to change at any time without notice. There's no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Content provided herein is for informational purposes only and should not be used or construed as investment advice or a recommendation regarding the purchase or sale of any security. All investing involves risk, including the potential for loss of principal. There is no guarantee that any investment plan or strategy will be successful. Please consult a professional before investing.